Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories today. Cautious trading across equities in the Asia Pacific after U.S. stocks extending those record highs. President Trump announcing a tariff deal with Vietnam that's ahead of the July 9th deadline.
More progress on trade as Germany's Siemens says the U.S. has lifted some curbs that sought to restrict the development of China's chip sector.
And Foxconn said to pull hundreds of Chinese engineers from its iPhone factories in India, dealing a blow to Apple's push to diversify its supply chain. The details on that Bloomberg scoop coming up. Good morning. Welcome to the show. Lots to get through today. Coming through, of course, from overnight, where we touched on record highs on the global benchmark. And you know what? Live shows for you. All the news coming through in the last 15 minutes or so. So ignore the sideways bottom of your screen. So we're now seeing a little bit more upside right now. Of course, we came up with that just a few minutes ago. Towards the upside right now, with Taiwan coming online about 1%. So that's really leading to most of the gains we're seeing right now, 0.3%. You know what? It's been very, very good to be long these equity markets this year so far. 1% to the upside in Japan as far as that's concerned. Now, other market themes to tell you about going into today. You have a 30-year bond auction. We'll get into what's been happening in the UK with FTSE futures and, of course, the pound down against every single one of its peers. On Wednesday, we're seeing a little bit of upside right now in cable and, of course, copper on the back of what? A clearer outlook as far as tariff growth and all expectations are concerned. LMEs now, as you can see here, a 10,000 handle on that. We'll get to the Shanghai contract in a moment, right? Overnight, a couple of names to watch going into the open today. So casinos had a very good day in Hong Kong yesterday. Melco was up a further 4.6 overnight. BYD on the story that it has put on ice indefinitely those plans for a Mexico plant. Baba Holdings down about 3%, and New Oriental, of course. Pay attention to maybe how these ones trade going into the open today. All that said, futures are pointing to the upside. And, of course, again, we're flirting with near the weak end of the band. Not quite there just yet again, but again, that's very, very close. And on the copper contract, there we go, up 0.3%. But yeah, Yvonne, it's really all about the trade deal with Vietnam, the big picture, of course, what it means broadly for China, how China might respond to that as well. And yeah, where we go with that broader conversation there.
Yeah, the way with China is that, you know, you could say a lot of exporters have been using Southeast Asia, in particular Vietnam, to redirect some of their exports to the U.S. in some ways. We'll get those charts to you in just a bit. And really, yeah, as you say, how Beijing is going to respond to this as well. But let's bring in our team. Bloomberg MLI strategist Mark Cranfield, our news desk editor Jill Deeses, and our congressional reporter Stephen Dennis on just all the big kind of top stories here today. Mark, I'll start with you, right? There's a trade deal between the U.S. and Vietnam. There's gilt turbulence, given what's going on in the UK. Plus, there's a JGB auction coming up. I mean, what's going to be the big thing for markets today?
If there's a common thread between those things, particularly using the gilts and the JGBs as the handle there, it's the curve steepening has got further to go across the world. So it's something which really started in the Treasury market earlier this year as people got concerned about the size of the US fiscal deficit, which appears to be getting wider, particularly if they pass this bill this week through Congress. And that's been feeding into other markets. And the turbulence you saw yesterday in the UK gilt market was particularly focused on the very long end of the curve, which is awful timing for the Japanese market, which is having a 30-year auction today. And they've been having a lot of trouble selling their 30-year debt this year. The Ministry of Finance has tried to stabilize that market by promising to reduce issuance. But there's really nothing they can do about what happens outside Japan. So if you've got steepening in the UK, steepening in Germany, steepening in the American market, that's all going to feed back into the Japanese market. And it's just made today's bond sale much more difficult than it would have been already. So that's certainly something which feeds into all of those markets. China's a little bit of an exception here. With if the United States thinks they're going to put pressure on China in terms of doing deals with other countries such as Vietnam, if anything, that's going to make the Chinese authorities more resolute to make the yuan the strongest currency in Asia. So the byproduct of that actually is probably going to be to stabilize Chinese markets. I don't think you're going to see the Chinese authorities backing down at all. There'll be more domestic stimulus. There'll be more plans to make the yuan a strong currency and invite foreign funds to come there. So if anything, it will make China more determined than ever to try and attract flows away from other places. But overall, that's good for Asian currencies because they'll feed off the strong yuan. As you say, there's a lot of moving parts here, but the common thread is steeper yield curves across the world.
Yeah, Mark, just stay put. Lots more to talk about, Mark, there. Jill, let me bring you in here because I'm looking at the Vietnam ETF that's just come online right now. In Taiwan, we're up 1% on that. Just give us the details, the context here of the trade deal, and is it a trade deal? What does it mean, of course, for the broader conversation with Beijing?
Well, I mean, as we know at this point, David, we're still waiting for an actual term sheet from the White House. We're still waiting for a more fulsome response from Hanoi just to see exactly where they stand on all of this. But what we know is, so there's a 20% tariff that the U.S. is placing on Vietnamese exports to the United States. There's that 40% levy on any goods deemed to be transshipped to the country, which I think is really, just when we're kind of grasping here for details, really kind of the key part of this. And then Trump is saying that in return, Vietnam has agreed to drop all levies on U.S. imports. So that's really where we stand right now. I think it's really, this is really important in the context of what Mark was just talking about when it comes to how China is responding to some of these. I think that 40% duty on those transshipped goods. I mean, when you consider, Vietnam's placement in the region, there's a lot of parts that are coming from China that are then make their way to Vietnam. Maybe that's sort of a last stage for manufacturing before that's then shipped to the United States or elsewhere, what have you. So if you're the United States, a big part of that is likely geared toward trying to, curb, trade, trying to create some sort of trade barriers for China. I think this really kind of feeds into that broader idea of what we're seeing from the Trump administration, as we've just been discussing, which is that, what the United States is trying to do is shore up these trade agreements with, various allies that it has or, other trading partners and trying to essentially box China out, of some of these, economic, measures that it's taking. So I think that that's really the important part. But again, I do just want to stress that we're still waiting for exactly what types of goods some of these duties cover. Still waiting for that response from Vietnam, really, in a little bit more detail. So I think, throughout the course of today, maybe we do get some clarity, but we'll see where we go from there. Yeah,
the transshipment, that's going to be interesting, how that's defined and also how that's going to be enforced, right? Because that's the China story, part of the China story there. Mark, can I bring you back in here? Because there was a separate story that came out. This is the Siemens, the Siemens story saying that the U.S. has rescinded chip software curbs. Now, that could be a separate story. It could be maybe, I'm just speculating here, maybe part of a broader deal with China. Who knows? Again, I'm speculating there. But how big of a deal is the chip curb story today, in your view, as far as risk assets go, Mark?
I don't think investors are going to place too much weight on it when you've got the July 9th deadlines coming up. I think they're more concerned that we get a situation, something like in April, where at the last minute, a whole slew of tariffs are placed on countries all over the world. That's a much bigger weighting for financial markets in the next few days. It's a bit of a binary situation. There is so much resting on what happens with July the 9th. It's not easy for traders to position ahead of it, because when you take defensive measures before a major event, you're giving away P&L, basically. It's costing you to do so. And you can see how quickly markets rebounded in April after the initial shock. Now, we may well get to July the 9th and it all dies down. We pass by quietly and nothing really happens. Investors will probably be pretty happy with that. But of course, we could also get a mini version of Liberation Day, and markets are really on edge going into that. So we're probably going to see trading volumes decline, people becoming a bit more defensive ahead of that, ready to react whether or not the tariffs are enacted at that time or not. It's going to be a very edgy period. And in a way, it's good that the July the 4th holiday is coming in between, because it gives people more time to reflect on what's happening. But it's going to be a very nervous period between now and next week as to who is allowed, who's in, who's out, and really how many people are going to be hit by that. So that's really what markets are much more focused on, regardless of something which is a bit periphery in terms of chips and something which is prone to being moved back and forth anyway. Much more important is July the 9th.
All right, Mark, thank you. Our MLI strategist, Mark Cranfield, there. Also, our thanks to our news desk editor, Jill Desis. Let's get to our other story, which is President Trump has also met with conservative lawmakers to discuss his signature tax bill as doubts grow over whether that legislation can pass by July 4th. Our congressional reporter, Stephen Dennis, joins us now from Capitol Hill in D.C. He's at the House of Representatives. Stephen, thanks so much for joining us. There's a lot of horse trading going on, but just give us what the latest is right now.
Yeah, they're still having a hard time corralling the House Freedom Caucus, that group of hardline conservatives. So far, they're not willing to vote for what's called the rule, which is a procedural vote to get you to final passage. And until they agree to do so, they have the power to block the bill. One of the things that we know that they've been trying to get is commitments for future spending cuts in future bills. But it's really hard to see how they'll be able to get those through a Congress that had a hard time passing this bill because of all the spending cuts in it. Now, the reality is for like bond markets, that's another thing that the Freedom Caucus is worried about. A lot of the conservative members point out that interest rates are much higher on U.S. debt than they were in 2017, and they want steep spending cuts to pay for the tax cuts this time around. They just don't have the votes of their colleagues to go along with steeper cuts, and so they're frustrated. Now, I do think if the bond market has problems, that could be jet fuel for a future spending cut package, but this bill is really stimulative in the next few years. There's temporary tax cuts for the next 4 years. There's temporary spending increases on defense and homeland security of hundreds of billions of dollars. So all that stimulus is going to, juice deficits, at least in the short run. Now, the administration keeps saying, well, growth will take care of it, but it's a little harder to grow when you have a higher interest rate environment, which is one of the reasons why you're seeing Trump weigh on Fed Chair Jay Powell to get out of town or cut those rates.
It's quite a difficult set of options there, Stephen. Very, very quickly, though, Stephen, are we still operating on the assumption that July 4th they might be able to get this past the line on July 4th? Is that now a hard sell?
The consensus here is that they're going to be able to pass this bill in the next 24 hours. We've seen surprises before, but all the leadership is convinced that they're going to be able to get this done by the deadline. But, they still have these holdout members, and they can only afford to lose 3 of them. There are already some who've said they would vote no, who have changed their minds after a meeting or a call with Trump. There's others who aren't talking in the hallway. So until there are 4 hard no's on the bill, I think you can be pretty confident that they're ultimately going to pass it. And then we'll find out later what the actual promises were made about future bills, about executive orders, other things that President Trump can do as far as implementing this bill. One of the big concerns of the conservatives, they want to get rid of all these green energy tax credits ASAP and faster than the Senate did. Well, maybe Trump can promise to do some things that make it hard to permit those. And, there are things that the administration has with their executive authority. And then there's so many wins in here for conservatives. The biggest deportation in history, tens of billions of dollars to construct prisons for unauthorized immigrants.
Right.
These are things that these guys want and have been pounding the table for years.
Stephen Dennis, thank you so much on the latest there, and I caveat that, and thank you so much, by the way, for staying up and for your time. I caveat that because there are some lines coming through right now from the U.S. President in a Truth Social post, and effectively he's saying that it looks like the House is ready to vote tonight and that the Republican House majority is united. So timeline set July 4th, and we'll see whether or not they are able to push, and in what form, right? Which version of it they are able to push through the line here. Right, separately, we also are getting some lines coming through here out of South Korea. Let me just bring that up here on my screens right now. Effectively talking about relations here between, well, a couple of things here. That's the president you see on your screens. Those are live pictures right now. This news conference to mark first 30 days in office. Of course, he did hit the ground running, improving relations there with Chinese and Russia.
Yeah, so that's interesting too, given that the U.S. and South Korea are also engaging in trade talks as well. But yes, to keep a strong alliance with the U.S. and the U.S.-Japan cooperation, according to Lee. So really more of a foreign policy tilt here in the first couple minutes of this media briefing. We'll get to you the latest there on, of course, how he marks the first month in office. We are counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Your agenda here today, we continue Wang Yi's tour in Europe as well. The Hong Kong dollar weakness, once again, we're watching very closely here after we did see HKMA intervene a second time this week. But yeah, we're still seeing maybe still a bit of weakness there. Some Caixin China services PMI numbers come out in just a few minutes as well. There's a debut in Hong Kong. We're talking about Cloudbreak Pharma, so another biotech company listing here in the city. We'll get to the latest there. And we got a big interview with the CEO coming up. And BYD, now there's plans, indefinite plans, to delay that Mexico plant amid some of the trade uncertainties there. We'll get you the latest on that story as well. In terms of sectors, we're watching casinos and copper stocks as well.
Yeah, there's so much news to get through right now. And not to mention, of course, the other big story that just came through in the last, let's call it, 1 hour or so. So Siemens has said that it has received a note that the U.S. has rescinded chip software curbs in China. Now, we reported just over a month ago about these efforts of Washington to restrict Chinese firms' access to that specific key software technology. Let's bring in Belle with us, who covered the story for us. So, yeah, what do we know exactly about what's being rescinded here?
Well, what's being rescinded is this pretty much total ban on exports of technology that can be used to design semiconductors to China. So it actually hasn't been in place for that long, according to our reporting. So we were saying at the end of May, the US government was essentially sending out these letters to leading chip design software firms, asking them not to sell their technology into mainland China. It appears that there's been a backflip on this because we had Siemens issuing this notice this morning saying that they could now actually once again resume sales of their technology to Chinese customers. It'll be really interesting to get more details, firstly, on why this has happened. I mean, we know that there's been a big effort from companies in Silicon Valley to essentially have less restrictions on sales of technology to China to try and sort of stop that continued drive for self-reliance, or at least to slow it down in mainland China. It'll be also interesting to hear which other companies got these notices, because when we saw them initially being announced, we had companies like Synopsys, Cadence, both of those are US listed, but really big drops in those equities or those stocks at the time.
Yeah, we'll see if there's any more sort of a follow-through on that. Another scoop that we're watching is what's going on in Foxconn. So what our reporting is that hundreds of Chinese engineers and technicians have returned home from factories and iPhone factories in India. What's happening there? Yeah,
this is a really great scoop that we had from our colleagues, but essentially it's exactly as you said. I mean, it's something that's been going on for a process now of around 2 months. It's around 300 staff that are believed to have returned home. It means that you're sending back engineers, you're sending back technicians. What's left now in terms of Chinese staff in India, according to our sources, is basically some support staff. So very much a skeleton crew that's in place there. It's not immediately clear why this has taken place, but we do know that Beijing has been at least verbally encouraging regulators, local governments as well in China to try and stop any sort of tech transfers, equipment transfers to India, other places in Southeast Asia. We know that there are countries out there that are really vying to be that part of the China Plus One strategy and to take more of a share of any companies that are looking to move their production outside China. Beijing obviously doesn't want that to take place. All
right, Belle, thank you with the latest with those two scoops here. Or take a look at China futures here and actually pointing quite positively. Obviously, we've been talking about what this whole rescinding of U.S. chip curbs, what that means for the tech space here today. And of course, maybe signs of U.S.-China, that trade deal is really now starting to get more implemented in some ways as well, in some of the key parts of this market.
Yeah, we'll see how the market reacts. Things like SMIC, for example, some of the Taiwan names already called higher in the opening 21 minutes of the cash market there. Cloudbreak Pharma, speaking of just a pivot at this very quickly. So the IPO price was north of 10, and as you can see, we're failing to break the clouds. Currently, we're down 6% in the pre-market. More on that in a moment. That's one of the debuts today here in Hong Kong, and what's really been a fantastic year to raise equity financing here in the city. Plenty more ahead. We'll be speaking, by the way, with the boss of the company later on the show. The opening bell 7 minutes away. This is the China Show. Okay, we're going into the open today, and you know what? I think we're losing some momentum, but broadly speaking, it's been a good year for stocks. Equities, though, here in Hong Kong have been rather range-bound in the last few weeks or so, but certainly we've been hitting higher and higher lows. If you're curious about the chart, you can check out my post earlier on Twitter. Or X. There we go.
There you go. A little bit of self-promotion there. Particularly when it comes to analyst actions here today. There's a little bit of talk in the property space and the casino space. So MGM China, that was raised to a buy at Goldman. SJM Holdings as well, cut to neutral there from the firm. And Wharf Real Estate, this one coming through from JPMorgan. So they're upgrading the Hong Kong property company there to overweight on expectations that the commercial property company will benefit from improving retail sales in the city. Keep in mind, we just got those retail sales yesterday in Hong Kong, better than expected and beating every estimate out there. So maybe some improving signs when it comes to the retail sector today. Stock to watch, BYD, that's the one to watch. Obviously, there's a Tesla story as well. BYD on their indefinite plans to delay that Mexican plant there. We're only seeing a little bit of movement in the stock here today, but the Tesla suppliers, the sales numbers that we got from the companies seem to suggest maybe we're hitting a little bit of a bottom when it comes to how these price wars and the like are developing here. So that's why maybe you're seeing a little bit of green on some of the suppliers like Ganfeng Lithium, for example, up some 1%. And then we got a listing debut today. Yeah,
Cloudbreak Pharma is coming online. Just keep in mind the context here is about north of 10 as far as the IPO price is concerned. Down about 6. We were up as much, I think, in double digits in the gray market, and then we settled in around a 7-8% gain in the gray market day before, and as you can see, the momentum has certainly disappeared and continued to the downside right going into the open today. Min Min Lo, of course, our China correspondent, will be live from the Hong Kong exchange floor to take us through the story, what this means broadly speaking for what PwC is now calling the world-beating equity market here in Hong Kong this year so far. And the PCO, of course, will be speaking to them later on in the show as well. The opening bell is coming up next, just over 3 minutes away. Hong Kong is flat. A50 futures are up 0.5%, and the Caixin PMI numbers are coming out in about 17-18 minutes or so. So lots more coming up. Suffice to say, good morning. Thanks for joining us. More ahead. This is the China Show. Welcome back. The opening bell just under a minute away. I'm going to get through all the items on your agenda today. We have a debut here in Hong Kong. We have Caixin numbers coming out in a couple of minutes. A 30-year JGB auction. We're still following the gilt drama and the pound seeing stability today. And of course, that's ahead of some key jobs numbers coming out of the U.S. And of course, in what version the bill is going to pass in the U.S. And of course, the opening today and what that means for the broader sector here, Yvonne. Broader sectors here, Yvonne.
Yeah, there's a lot of stories going on in some way, and how you weave it all together, right? What does this gilt turbulence mean for this JGB auction for the 30-year later on today? We had a good 10-year. Does that mean the 30-year could actually be quite interesting here today as well? So certainly that's one to watch here. Some of the trade headlines there, and the U.S. Making this trade deal with Vietnam certainly has a lot of China implications as well, because it is a way, in some ways, a major win for D.C. to try to isolate Beijing from its supply chain. So certainly that's one thing to watch. Here's how the open is looking like here in onshore. Decent gains so far. We're CSI 300 up about 0.1%. We're not seeing a whole lot of movement in bond yields here this morning, but we're watching very closely the commodities. Certainly, maybe the signs of a trade deal are helping some of the likes of steel. Iron ore is up some 1%. Shanghai crude is also doing quite well here today. And we're watching very closely some of these Tesla suppliers. What we saw in some of the sales numbers suggest maybe we reached a little bit of a bottom in terms of where these price wars go and the like here in competition in that space. So CATL shares, for example, are catching a slight bit this morning. In Hong Kong, it's a little bit more of a mixed picture here. We're just seeing unchanged HS Tech here this morning. We're up about 0.1% for Air 8 shares. Hang Seng, I should say. The property space is actually doing quite well. So JPMorgan with that upgrade when it comes to the likes of Wharf, saying that improved prospects in the retail space might help the likes of the commercial property side of things. So Wharf is their pick there, and I switched from underweight to overweight. So Hang Seng property doing quite well here as well. We're still trading around that weekend of that trading band for honky dollar 784.99 level. So we'll see if we see any more intervention from the central bank. You take a look at how Alibaba goes. There was this report about them adding to more subsidies as well. So certainly maybe that could be something that is something catalyst for the stock. You take a look at how we're looking at when it comes to Tesla suppliers. That's certainly one thing to watch very closely, right? So Alibaba's down some 1%. Baidu's up 1% as well. Goldman had a pretty interesting note about these e-commerce plays like Alibaba, like Meituan. They're suggesting maybe we're seeing kind of the worst of these kind of, the competition when it comes to food delivery. And perhaps we've reached a peak in this whole price war in the September quarter, and it's all already in the price. So they're saying there is a bit of an inflection point when you take a look at Alibaba, when you look at Meituan. That is the view there. We mentioned about Tesla suppliers, right? Let's hear how they're doing here today. It seems like it is a bit of a mixed picture overall. But yes, the delivery did fall for a second straight quarter, but it was still better than expected, right? So maybe that's why we're seeing a little bit more upside in some of these suppliers here today. And then we got a listing debut, Cloudbreak Pharma. This is what's going on. So pre-market didn't look too good. There you go. We're seeing shares at the open down some 10%. Another biotech company. Obviously, there's been a lot of, I guess, frenzy around this space. But interesting enough, we're seeing not a stellar debut today, Dave.
Yeah. If it's any consolation, I got a 10 out of 100 in one of my college exams and bounced back quite nicely. So we'll see. If my path onward and upward is any indication, things hopefully get better from here. In fact, let's get more context on this because Min Min Lo, our China correspondent, is in fact at the Hong Kong Exchange floor for this listing and this debut. And yeah, so not exactly the best first few minutes, Min, but give us some context here.
Yeah, I heard a small cheer from the room just now as we were counting down to the gong ceremony, but certainly not a very strong debut today. Down about 10% at the open, even though a day ago in the grey market, it was about 80 times oversubscribed by retail investors here in Hong Kong. But if you look at the interest from international investors, though, it was a little bit undersubscribed. So perhaps not so surprising that it is trading quite a bit down at the open today. But this is a company that is invested heavily in drug development, especially for eye treatment, things like glaucoma, myopia as well, dry eyes disease. They're still quite a long way away from commercialization because a lot of their products are still in the preclinical trials or clinical trial stage. But it's a company that is interestingly headquartered in the United States with a lot of operations in mainland China. So it's interesting that they have chosen to list here in Hong Kong. I'll be asking that question to the CEO here, Dr. Jinsong, in about half an hour from now. But certainly both US and China are important markets for them, especially China, given some of the government support we have seen so far with the Chinese government encouraging insurers to invest in new drug development. And if the company can take advantage of that, of course, it will give them an ability to set higher prices and make their products more available for the masses.
Okay, Cloudbreak certainly not having a big break today, but I'm just wondering, in the grand scheme of things, this is coming at a time when Hong Kong is seeing a flurry of IPOs or listings as well. It seems like investors are still shaking off any sort of tariff concerns, Min Min.
That's right. It is shaping up to be a red-hot year for Hong Kong. And as you said earlier, Dave, PwC expecting Hong Kong to claim the top spot for global IPOs this year. If you look at total proceeds from share sales so far in the first half of the year, we are up 30%. We are shaping up for potentially becoming the second largest marketplace for share sales for the first time since 2012. So clearly it seems like a lot of that water is under the bridge when it comes to tariffs. A lot of the IPOs we are seeing in Hong Kong are coming from companies that are already listed in the mainland. So the sort of AH deals that we are seeing contributing to 3/4 of the IPOs here. But we are also picking up listings that previously would have gone to New York, because a lot of investors now are looking to move cash out of the US given the geopolitical uncertainties. Of course, the Hang Seng's overperformance this year also helped boosting the optimism here in Hong Kong as well. Continue to expect more listings in the second half of the year, especially from companies that depend heavily on China's domestic demand, because those companies will be shielded from geopolitical headwinds and benefit from stimulus. So we do have companies in the pipeline, including a pig breeder, Mu Yuan Foods, as well as Seren Group, which is an electric vehicle maker. Again, that is a sector that is doing really well in Hong Kong. And it's especially remarkable if you compare with the greatest rival, India, was the top leader in the APAC region last year. Their share sales proceed in the first half had been down 20% compared to Hong Kong, which is up 30% in the first half of the year.
All right, Min Min, thank you. Our China correspondent Min Min Lo there. Of course, as she mentioned, Min Min will be speaking to the founder and CEO at Cloudbreak at the top of the next hour. In the meantime, let's bring in Sylvia Sheng, global multi-asset strategist at JPMorgan Asset Management. Her team just released their second half asset allocation views, and it was no shortage of news and volatility for the first half, whether it was trade concerns, budget concerns, what we're seeing, the U.S. dollar, and also the Middle East. Things have seemed to have subsided a bit. What's in store for the second half?
So looking at the second half, we do have a more benign growth outlook, especially looking at the U.S. We do think that after some of the volatilities in policies, we are looking at more stronger growth, especially going into 26 with the fiscal support coming in. And from asset allocation perspective, we do have a modest pro-risk tilt in our multi-asset portfolios, mainly focused on U.S. equities in high yield and also selective equity bets in regionals such as Hong Kong, EM and Japan. Also sectors we like tech in the U.S. still.
Yeah, overweight high yield credit, we're starting to get data on the U.S. that's coming in softer than the previous version of that piece of data. Are you concerned about what it means for high yield, especially given how tight spreads already are at the moment?
Yeah, there's definitely no argument with the tight spread right now, but we still think it's more of a carry play. So when we look at our recession risk, we think it's more muted compared to where we were earlier this year. And the household as well as corporate balance sheet, we think is still pretty strong at this moment, so still supports our high yield credit call.
How are you looking at U.S. Treasuries then? Is there a specific range that you're looking at? And is it looking more attractive compared to the rest of the world still?
So looking at U.S. Treasuries, the 10-year, we think probably trading somewhere around 375 to 450. So we are closer to the upper end of the range. So we still see value in U.S. Treasuries, but maybe towards the short end of the curve, so 3 to 5 years. But looking globally, we do think there's more value outside of the U.S., especially looking at Europe. Italian bonds, BTPs, we think still pretty good carry play here.
I was going to ask you about UK gilts, which is one of your preferences, and what's going on there, and the theatrics that are going on in the UK right now. What should I be doing with UK gilts?
So it was one of our preferred markets, but we think that's more driven by the fact we do think there are more rate cuts to come from the BOE compared to what the market is pricing. Clearly, what happened yesterday is a bit of more of a risk, but we do see kind of the kind of Keir Starmer walking back of some of the comments during the Prime Minister question time. So hopefully that's more of a short-term volatility.
Yeah, well, let me ask you a follow-up on that. If Rachel Reeves loses her job, do you think you'll keep this call? Or in other words, does the Bank of England part of the conversation outweigh anything on the political side?
I do think there's definitely going to be more focus on fiscal sustainability in the UK if we do have the unfortunate event if Rachel Reeves doesn't stay in the cabinet. So I think that is definitely something we need to monitor.
Yeah, if you take a look, we were just talking about what did well in the first half. It was equities, it was alternatives, and it was gold for the most part. We kind of captured a little bit more the equity side of things, but what about, when it comes to private credit or private markets, when it comes to alternatives and gold? What should I do with those in the second half now?
So I think it's more of a longer-term play when you think about what we have in store. It's really about more active fiscal policy really everywhere, not just in the US, also in Europe as well. We're seeing that in China. And we do think eventually that's going to be more inflationary compared to what we saw after the GFC. So some of the assets you mentioned, alternatives, especially real assets and gold, they all tend to perform better in a higher inflationary environment.
You mentioned regional equities. Can you be more specific? Like what apart from U.S. equities do you prefer?
So we like Hong Kong equities. So we think it still has a bit of valuation support, and the momentum now is building. We think more broadly. We think that could definitely persist. And currently, we don't think there's much policy expectations built into the market. So we think that that's potentially could be an upside risk where we look at Hong Kong. Japan is still one of our favorite market compared to other DM markets. It is cheaper, and we think there's more structural momentum with that corporate reforms going on.
And just on one last on the dollar, I guess, is the assumption the dollar weakness continues?
Yeah, we do think that in the second half of this year we're going to see more dollar weakness, and it's also one of our calls in our long-term capital market assumptions that we think dollar is structurally more expensive, that there is more room for it to weaken.
Yeah, well, fortunately for us, we're all paid in a currency pegged to the dollar, guys. Thank you so much. Thank you so much, and have a great rest of your week ahead. Yvonne, sorry, you're stuck with me. Lots more coming up here. Sylvia Sheng, the global multi-asset strategist, JPMorgan Asset Management. All right, coming up, we'll be going to Kyoto. Why? Well, coming up is because you have the Japan Investment Corporation joining us as the government seeks to beef up the country's startup sector, and it's the Kyoto Innovation Venture Summit taking place there. So lots of, what is Japan's role as far as the AI conversation goes? Where are they as far as the frontier of key technologies these days? We'll get to all of that with Yuka Hata coming up. This is The China Show.
Let's head to Kyoto now, where the startup conference IVS begins there today with investors, business leaders, and policymakers gathering to discuss startup investment and business opportunities. Dave was mentioning the website looks like a video game.
It does. In fact, when you, just for our viewers, right, you can just go to the website. There we go. The backdrop is, who remembers Space Invaders, right?
Yes.
That's the backdrop there. And it really brings back memories of when, I think still is with the Switch, but really back in the days when Japan, was at the forefront of things like games and what have you. And I think right now, part of what the government's trying to do is they're trying to partner with private VCs and attracting overseas VCs to look at Japanese VC opportunities and what names are scalable beyond the local market and what best practices they can bring to the domestic market.
And they have a very ambitious plan, the government, right? Pushing to grow 100,000 startups and 100 unicorn companies by 2027.
It's the Go Global initiative that GIC started back in 2022. In fact, just on that note, let's go live now to the event itself and our next guest. In fact, Yuka Hata is Senior Managing Director and Head of Fund Investments at GIC, Japan Investment Corporation. Yuka, thank you so much for joining us. I guess maybe give us an update first, because you guys launched the Go Global initiative back in 2022. It's been about 3 years since then. What progress have you seen from this exercise?
Well, thank you for asking. So JC itself actually founded in 2018, and obviously, our purpose is really to build Japan's kind of VC ecosystem. So launching this kind of program in 2020 July. So since then, we've been really working hard to deploy the risk capital to the Japan's kind of VC ecosystem itself. Now, the global strategy itself, as you mentioned, that back in 2022, we kind of started to collaborate with kind of overseas managers, because obviously, supported by the Japanese government and create kind of unicorn, the number of unicorn out of this country. Definitely, the key is to create a global startup out of these countries. But for that reason, JC has actually set the global Go Global strategies back in 2022, and starting to investing to the overseas managers in the U.S., Europe, and Asia to kind of build the corridor in between our country, Japan, and versus each of the countries, so that we can collaborate together to create a global startup out of this country.
And Yuka, the VC world in Japan seems to be still quite small, right? Maybe just given against a backdrop where you already have a very legacy innovative tech companies that are already leading the charge in many sectors and segments. You also have very deep stock markets as well. Overall, what's going to be the pitch then to really getting overseas investors interested in the startup space in Japan?
Well, thank you. So obviously, Japan, as of today, the overall market size is definitely still kind of small, but it's really evolving and over time in 10 years, and this is steady growth as of today. Obviously, influenced a little bit, same as the kind of U.S. and other markets. As of today, the fundraising momentum is very kind of tough, in this market as well. But on the other hand, we see that a lot of, the great talent pool coming into this kind of ecosystem. You may, think about Japan. It used to be, top elite student used to work for, the big corporations, big brand name companies, or investment banking and a consulting space, but they are all coming into the startup. This is definitely a promising trend in Japan. We definitely believe that this kind of steady growth will push forward to, expand our global VC ecosystem in Japan.
And Yuka, I was wondering if you could contextualize for us what challenges remain on the ground. In other words, when you speak with overseas institutional investors, limited partners, overseas VCs, what are some of the concerns that they bring up that you think are addressable over the short to medium term?
Right, thank you. So obviously, the global institutional investors are seeking the VC type of return out of this market. And yes, Japan, as of today, relatively, monetization, liquidity we have compared to the other markets, definitely. But on the other hand, to create a VC type of the return out of this market, definitely we need to create more the number of the big unicorn. So that, together with the government, VC players and startup, we all are aiming to create more big startup rather than creating the number of the small IPO in this market. This trend is definitely for sure it's really coming up in this market.
And Yuka, just to follow up on that, what kind of returns are currently on offer right now in the market? What kind of VC returns are we looking at currently?
Obviously, since GICs are in this market and communicating with all our investee fund manager, what we're requiring then is you should definitely aim to the target return definitely far better than a buyout type of returns, because as of today, so many foreign investors are chasing the local buyout managers as of today. So obviously, the local VC fund return needed to be outperformed of the buyout type of return, which is obviously, at least definitely, 2x, 3x net out of this return. So this is something obviously the institutional LPs are looking for the VC type of return.
And there's a lot of reforms that are going on in the Japanese market as well, in particular when it comes to the listing criterias for the Tokyo Stock Exchange growth market, and the fact that regulators are actually considering tightening the listing requirements there. There's also been a lack of large-scale exits as well in this market. Can you tell us what the impact that really has on VCs and startups in the country?
Yes, well, obviously, we all believe in, the people are in this kind of ecosystem. This is definitely the welcoming, the exit strategy for the Tokyo Stock Exchange, because that actually shared a consensus with the VC players and then the startup that, we should actually create big IPO in the private market, which means that obviously we have to make sure that, the foster the startup big enough before the IPO. This is definitely, we share the kind of the same vision. And obviously the people are trying to be well prepared to support, to grow big enough before the IPO. That's one side of the different trends coming up. And on the other hand, obviously markets have to prepare the kind of liquidity for the VC fund managers. And JC, as the ecosystem builders, we are working hard to support the secondary market player in this country.
Sure.
So this is definitely
Yuka,
coming
we gotta
up.
leave it
so
there,
we've been
though.
actually becoming the sponsor LP. Okay.
Okay, Yuka, thank you so much. Yuka Hata, Senior Managing Director and Head of Fund Investments at Japan Investment Corporation. Thanks so much for your time. And coming up later, we're talking about Sega. Remember that name? Sega Corporation's president joins Insight with their outlook on Japan's tech and gaming sector. We got plenty more ahead. This is Bloomberg. All right, we got some Caixin numbers crossing near Bloomberg here right now. A slight miss of 50.6 for the services side of things there. And of course, we're seeing a little bit of reaction in renminbi this morning, Dave.
Yeah, lots to get through today. And of course, just to mention that the inflation numbers out of China are coming out on July 9th. So I think lots of things are coalescing around that specific date. Speaking of July 9th and the trade conversation, the big one, of course, overnight was Vietnam. And as you can see, the pop in ETF turnover in the U.S. listing. The cash market opens up in a couple of minutes. We'll see what the reaction looks like. If the ETF in Taiwan is any indication, up 1%. We're probably going to get some upside. We'll see how long it lasts, though. But as you can see, interest is back in this market. The broader context is coming up, what it means for Beijing-Washington conversations.
It is a beautiful day here in Hong Kong. The skies are blue. The heat wave, well, yeah, that continues though.
But yeah, it's nice to look at.
The heat in this equity market, though, seems to be taking off here a little bit. We're down about 2/3 of 1%. H-shares seeing a little bit more of a deeper drop here, about 0.8 of 1%. So we're not really seeing that many drivers in all this. But then again, there's a lot of going on in the undercurrent, right? Whether you take a look at what's going on in the JGB market with that auction coming up, you have what's going on in the gilts market as well. Yeah. And yes, there is now a trade deal between the U.S. and Vietnam, which in some ways does actually hit China.
Yeah, I think Beijing did warn weeks back that any deal that would be against their interests, that they would be paying attention to, and this might actually be part of that. And we'll see how they respond. Of course, certainly the one of the two things that has come out from our folks at Bloomberg Economics is number one, the relative benefit for the U.S. With Vietnam as an export market is quite tiny. In terms of the value of exports that actually, American exports that went to Vietnam. Now, what the hit to Vietnam might be deeper, and of course, but the devil in the details really what happens with the Chinese response when it comes to this. The other thing that is also worth noting on that story before we move on is that Vietnam comes online this hour. So we'll see what the initial trade looks like and the verdict coming from markets in the opening minutes once we do get trade underway. On the VN index. Right, 7 to 1% to the downside, Hang Seng index. To Yvonne's point, we're still following the political gyrations as it pertains to not just fiscal health, right? The actual job security of fiscal officials, let's put it that way, in the UK. We're steady on the pound. We're seeing a bit of a bounce right now on the pound against the Aussie, which, by the way, when you look at some of the technicals here, actually bounced off the 100-day moving average as far as that's concerned. So the pound was down against every single one of its peers yesterday, and as you can see, it's up against some, not all, currently. And the other story we're tracking this hour is this trading debut here in Hong Kong. Cloudbreak Pharma debut at, okay. Ooh, all right. 41% down in the first 30 minutes of trade. I'm not sure, but do I need eyeglasses? No, that's probably correct, right? Yeah.
We'll get a lot of questions, obviously, for the CEO coming up, and that's why we are going to go to now the Hong Kong Exchange, and our China correspondent, Min Min Lo, is standing by with our next guest. Min Min.
Yes, I am joined here by the CEO of Cloudbreak Pharma, Dr. Jinsong. I think you saw on the screen earlier the debut today, down 40%, just half an hour into the open. What is your reaction?
Oh, this is still a long journey, right? So this is it's a start, but we really believe our business and the talents within the company. I think the company will do well in the long term.
Okay, well, first of all, congratulations on the listing. I'm very curious about your company structure because you're headquartered in the US, you founded it there, and yet some have described you as a China-based company because of a lot of your work here in Asia. And I know the US is still an important market, you're doing a lot of clinical trials there, so you're kind of straddling both worlds. Why pick Hong Kong for the IPO when you're headquartered in California?
Sure, so if you look at our company, we have staffs in the US and also China as well, and our investor base is mostly from China based. So Hong Kong is a bridge between both US and China. That's why we picked Hong Kong as a good place for us to launch the first step.
Okay, just give us a very quick overview of your core product pipeline because I've had the fortune of actually not being very familiar with some of the diseases that your products treat. So quick overview, what is the competitive landscape that you're operating in?
Right. So we're exclusively focused on ophthalmic drug research and development and future commercialization. Our pipeline-wise includes some first-in-class drugs, some even the first drug therapy to treat some important eye disease like pterygia and pingracular. But we also have some best-in-class product to treat myopia, presbyopia, and dry eye diseases as well.
Okay, and I understand a lot of your products are still in clinical trials. What is your projected timeline to get regulatory approval and commercialization and to get a significant enough level of market penetration? And which market are you prioritizing for your first launch?
Yeah, so we're still doing the critical phase 3 and phase 2 clinical trials. And our top focus will be US market as well, China market as well.
Timeline for that?
We're working on it. We're working very hard to get our clinical trial going. So as I said, phase 3 is the final stage. Hopefully we can cross the finish line early.
Within this year?
Well, we're working hard on this.
Okay. One of the things that stood out to me when I read your prospectus is this big caveat that it is possible none of your drug candidates would reach successful commercialization. What are the biggest roadblocks that you're anticipating?
Yeah, the drug development is a long process. They have to go through stage phase 1, phase 2, and phase 3, and finally to get to the FDA or CD's desk. So it typically takes about 10 years of the work and then even close to $1 billion to get to the finish line. So this is pretty natural for our business.
Okay. I'm curious, given the geopolitical climate that we're seeing, for example, the US has passed the Biosecure Act, they have blacklisted some Chinese pharma companies, and I don't know if headquartering in the US was part of the calculation to mitigate those risks, but what do you assess as your ability to meet some of these geopolitical headwinds and regulatory risks that you could be facing?
Right, so we founded the company Irvine, California in 2015. So it's just because a lot of the founders are based in US. In terms of geopolitics, it's hard for us to control. What we can do is just work hard to try to bring all those innovative medicine to the market. That's where we are mission on.
What about tariffs? Because your production facility is in China, so I'm assuming you will export out of China to the US. And then are you prepared then to absorb potential sectoral tariffs on pharmaceuticals?
We actually have both productions in the US and China. In the US, we have a CDMO supplying the phase 3 trial and probably initial commercialization. So we're also planning to build a facility in China as well. So we have both production in both areas.
So you'll be setting up a factory in the US as well for the US market?
Yeah, for the CDMO, basic contract labs to produce.
Okay. Let's talk about the China market because the government has actually been encouraging insurers to invest more in new drug development. So Are you taking advantage of that? How far are you with securing partnerships to cover your drugs, and how does it affect your pricing strategies in China?
Yeah, so for the first product, we already have a partnership with a local, manufacturing company. So we are well set, and then in the future we will, gradually market into that space ourselves.
Okay. You mentioned earlier that a lot of your investors are actually based in mainland China. So you're getting more interest from investors in this part of the world, not as much in the US. Why is that, you think?
Well, it's because when we started the company, we found the investor in China, and then they excited about the company. They introduced a lot of the local investors. That's why we have a lot of Chinese investors. But in the future, when this company grow to the next phase, we will welcome other international investors to our base.
So how much of your research is done in China versus the US?
Our strategy is mostly start early clinical trial in the US and then bring that result to the FDA once we get positive feedback, and then we bring back to China to conduct last phase 3, which is the MRCT clinical trial where China participated in a global trial. So that's our strategy. But we started from US first.
So you start in the US, and then the last phase is in China, and the main market is in China.
So the last phase of the trial comprised US and China, some other countries. So China will be part of the global approval once the...
Okay. And I'm curious, given this tech rivalry with the United States, how easy it is for you to attract and retain top-tier international talents and scientists to work for a company that has significant ties and work in China?
Yeah, I mean, a lot of our founders, executives, has a lot of experiences, working in the U.S. pharma business, particularly in the ophthalmic R&D space. So finding a talent has been relatively straightforward for us. We have a lot of friends that we really like to work with, so we can, recruit them back to our company. So.
Okay, so a lot of them, I think you're a perfect example. You educated in China and furthered your studies in the West and eventually settled down there. So most of these talents, people like you.
Yeah, correct.
Okay. All right. There was Dr. Jinsong, the CEO of Cloudbreak Pharma, speaking to us exclusively here at the Hong Kong Stock Exchange after their IPO listing this morning.
Yeah, Min-Lo, thank you so much. Not the best first day of trading, but as the CEO pointing out, of course, it's a longer-term story, and the runway is long. Not just for the company, but really for the sector, given all the government initiatives as well to support this. Right, just on the topic of trading debuts, in Oz, the largest one of the year is doing better. We're up about, last we checked, about 6%. Just keep in mind the IPO price for this one was at 440 Aussie. No, 440 was the open. 416, my mistake, was actually the open. We're trading at 445. So roughly near session highs as far as this specific listing is concerned there.
And we got some more lines crossing here when it comes to what are these U.S. chip curves and how Siemens first came out saying that they received a note from the U.S. that they have rescinded these China export curves. Well, Cadence Design is the next one that has confirmed that, in fact, those export curves on China have been rescinded. So this certainly is a good news for the company. According to Bloomberg Intelligence, they've calculated sales to Chinese customers generate about 11% for Cadence itself. So certainly we'll watch very closely the chip space here this morning. Plenty more ahead. This is Bloomberg.
Welcome back. It's about a couple of minutes into the session in Vietnam, and this is a two-day look at the market. And of course, as you can see, the uptrend into the close, and then overnight in between the announcements so far, we're lacking things like a term sheet and everything else. But an announcement from the U.S. president that a deal has been reached. We're looking at declines in the early goings of about, let's call it flat right now. Volumes are still on the lighter, so let's wait for this to really get warmed up to really, I guess, in some ways underscore the importance of this development, Yvonne.
it's important because it has implications for China, which we have to kind of flesh out in some ways. Because, Dave, as you mentioned, when it comes to U.S. and Vietnam, and when you look at trade deficits, Vietnam does rank as some of the top 10 in which the U.S. does have right now. Because we have seen, when it comes to imports from Vietnam, that has surged over the past few years. Well, you got to ask why. It's this whole kind of concept of transshipment, right? That's why beyond just the tariff headlines of from 40% to 20% for Vietnam, there's also a 40% transshipment duty there. And that is aimed at countering what we've also been talking about is Chinese exports being redirected in some ways to Southeast Asia. You're seeing that in Vietnam, Thailand, Indonesia. So most parts of Southeast Asia are kind of seeing these kind of trade flows and basically as they try to redirect overall where trade flows go in the midst of all these tariffs, right? So in some ways, you take a look at that, and this sort of deal is in ways aiming at isolate China from global supply chains. And you take a look at how China's trade surplus with Vietnam is looking like. That actually has hit a record high. So that surplus topped some $10 billion in May, and that was a time when U.S. slapped triple-digit tariffs on China, and coming at a time when we actually saw Chinese shipments to the U.S. plummet some 30%. So you are seeing Vietnam in some ways benefit from these cross tensions as well. And that now gives that total surplus between China and Vietnam at a massive $77 billion as of May. The China Today column kind of highlights this as well. And this is why we've been hearing warnings from Beijing during the time when U.S. is making these negotiations with the rest of the world. They're firmly opposing any party reaching a deal at the expense of Chinese interests in exchange for so-called tariff reductions. Don't hurt China along the way. So the key really here is, Dave, that if we see and you wipe out the whole transshipment side of things, economists say this is going to be a huge blow and dent when it comes to the Chinese economy and exporters as well. And is Vietnam sort of the first domino to fall for China as U.S. tries to push more trade deals with Asia, with the Europeans as well? But as we've been talking about, the key really has to do with how they define these transshipments and how they also look at the enforcement side of things.
Yeah, the devil will really be in how they plug the hole, right? And how they determine the parameters of really that specific channel. I guess just on the note that Yvonne was just making there, right? So there's a broader conversation to be had. Like, this is a proxy really of what this perhaps means for other potential trade deals the next few days. We're just hearing, in fact, right now, and this is, I believe, coming out of the South Koreans. It's unclear whether South Korea can, in fact, finish U.S. tariff talks by July the 8th, right? So this is a developing story across many fronts, and can they use this specific template of Vietnam as perhaps something to latch onto? Now, with all that being said, Hanoi hasn't confirmed, in fact, the terms of that framework deal that the U.S. president is touting. In fact, Bill Ferries joins us right now for the context here, our senior editor. Bill, so several things were announced out of the U.S. side. What are we waiting for next to understand if, in fact, a deal has been signed?
Well, for starters, it would really help to have that term sheet or any kind of a memo basically laying out some of the specific terms. We don't really know what this is beyond some of the comments made on social media, largely by Donald Trump, mentioning the 20% tariff on Vietnam's exports to the U.S., the 40% on transshipments, as you mentioned. But I think there's going to be a lot of interest in whether that suddenly becomes a base case for a lot of other nations in Southeast Asia. Is this what Thailand should roughly be looking at? Is this what Cambodia or Indonesia or some of these other economies in the region should be expecting? Or could they possibly still get a better deal? It's hard to know. There's a limited bandwidth in the administration to negotiate all of these deals at once. July 9th is coming up on us in less than a week. So it's quite possible that they either get sent a specific tariff rate or they default into something else that a country in the region has gotten. I think that's the first big thing. The next is, listen, this is only the third really rough deal we've gotten ahead of the July 9th deadline. It was China, it was the UK, now it's Vietnam. We don't have a lot of details on really any of those agreements so far. The big question is, how many more can the U.S. really strike between now and next Tuesday? Will they extend that deadline at all? I don't think we're going to know the answers to some of that until we're in the final stretch. And by that, I mean, within 24 hours or even the day after that deadline passes.
Yeah, we were just talking about the China impact on all this as well, given the transshipment duties and the like. How do you think Beijing is going to respond to some of these trade deals that the U.S. is striking out with the rest of Asia?
Well, I don't think it's great news for Beijing. I mean, if there's a transshipment tariff rate of 40%, that right off the top suggests to me that China can't get below 40% and probably is going to get something higher. That's going to be seen, with the way the U.S. has built this, with a 20% extra tariff for fentanyl and things like that. All of a sudden, you're back at a very high level compared to historic levels. So I think Beijing's going to find that frustrating. I think it's going to do some damage to bilateral trade. But then, of course, China is already going to be pushing back against this whole transshipment idea. How that gets defined, how well and vigorously that gets enforced is going to be a big question mark. That's one reason it would be nice to see the terms of this deal. But certainly transshipment, as we see with Vietnam, that's going to be an issue for a lot of other countries then. It's going to be something the U.S. looks for in Thailand, in Indonesia, in the Philippines, in pretty much the whole world. And that's going to put a lot of pressure on Beijing's ability to export to the rest of the world.
All right. Bill, thank you. Bill Ferry is there, our senior editor, joining us out of Singapore. Let's bring in MLI strategist Mark Cranfield now. Bill, Mark, I got to get your take on what's all going on here, whether it's from the gilt markets and the impact it could have on this JGB auction later on today, to everything that is going on with trade. What do you think is going to be top of mind for you?
We can just follow on briefly from what Bill was talking about there, because it's pretty significant for Asia. And you can see the initial response that's come out of China. The central bank, PBOC, does this daily fixing of the yuan, and they actually pushed the dollar-yuan fixing slightly lower. So clear signal from the Chinese authorities in terms of financial markets. They're saying, look, we're on a very steady path here. We're on a course that we're very confident about. We can see the stimulus is working. The Caixin numbers, again, were decent today, following on strong PMI numbers from earlier in the week. So China is saying, look, we're doing what we can to make sure that our domestic economy is protected here. Our financial markets are in good shape, regardless of what trade deals are done between the United States and Vietnam or any other country. And look at the Taiwanese dollar today as well. It's roaring again. I mean, the Taiwanese dollar is super strong, which is in itself a mirror of what's happening with the yuan as well. So the messaging is pretty clear from the financial markets side, is that we're going to stay on a path that supports our domestic markets and invites funds to come in from other parts of the world, particularly if people are leaving the US dollar, regardless of what trade deals are being done there. So that's a pretty strong signal to global investors.
Mark, the other and somewhat related story, I'll try and tie what's happening in the gilt market to, you had a decent 10-year auction in the U.S., and we have a 30-year auction coming up in Japan. We know that hasn't done well, but also it's the first 30-year auction, I believe, out of JGBs since the Ministry of Finance said they will be issuing less on that long end of the curve. Do you think this auction is going to go well today, Mark?
It won't be easy. It's not just because of the fact that gilts had a rough day yesterday. The underlying message is all about steep curve steepening, and that's something that's completely outside the Bank of Japan's control. The steepening began with the Treasury market earlier this year. Japan had its own burst of steepening, which is partly happening because of stagflation issues in Japan. The Bank of Japan isn't getting on top of the inflationary readings. That's hurting the long end of the curve. And then you've got this occurrence in the gilt market as well yesterday, plus German curve is also pretty steep as well. So it's a whole G10 thing. You've got steepening going on everywhere in the major countries, and that's just going to feed back into Japan. That is a dampening effect on today's auction as well. It's going to make it a little bit more difficult for them to get it over the line. The auction will probably go through okay. It's what happens in the secondary market that's the key for investors. It's whether or not the bids that they see in the auction today will sustain and continue. And that's not really been the case in some of the recent deals. We see the market start to tank after the auction is out of the way. And it's going to be pretty tough, considering the global messaging back into the fixed income market in Japan. It's going to be very hard for JGBs to outperform other major markets which are struggling as well. Especially now we've got this new dynamic of the gilt market, which is going to probably be in for another choppy day today. So you've got all this coming in a short week as well, with the US going on holiday on Friday. Bond traders are not going to be optimistic going into the weekend. They're going to be as defensive as possible, and that will affect the JGBs today.
Yeah, Mark, speaking of holidays, I wonder if anyone's working in a Singapore office. Seems like it's completely empty behind you. We got to get people to work here. Mark, thank you so much. You should not be carrying everything on your shoulders, sir. Yeah, but anyway, markets doing this. Hang Seng Index about an hour into the session here. Vietnam's about a couple of minutes in. A look at equity markets. This is Bloomberg. Right, just a look at markets right now. Down there, as you can see across markets here in Hong Kong, 1%. You're looking at tech leading these declines. Baba and Kingsoft, the worst performers so far in the first 60 minutes of trade.
All right, 11:29 a.m. in Tokyo. Japanese markets are going on break in a minute. Of course, we still have to deal with this JGB auction we've been talking about later on this morning here. And we are watching very closely that 30-year yield, right? The bid to cover in the last one was at around 2.92, which was quite low. We'll see if we get anything above that here today in terms of demand picture. But as Dave mentioned, this is the first time we're seeing this auction since the Ministry of Finance did tweak that issuance on the long end of the curve here, though. But equity markets are pretty flat here this morning, Dave. Yeah, improved the conditions really for this, Davey. But as Mark Cranfield did point out earlier on, it's going to be difficult. It's going to be difficult given the curve steepening trend that's going on beyond the control of the Japanese. Right. Let's get more details now on this fairly big story that's taking place right now around the trade conversations, tech curbs, whatnot. So you have Chinese chip stocks in focus and coming up on your screens very, very shortly. That's after you have Siemens, Cadence Systems, and Synopsys have said that the U.S. has lifted curbs on the export of chip software, design software to China. For more on this, Mackenzie Hawkins, our tech and geopolitics reporter, is here to talk us through what we know so far here.
So all three of the leading makers of electronic design automation, or EDA tools, which are used to design chips, like everything from those AI components made by NVIDIA to basic power generation components. All three of those companies said that curbs that the Trump administration imposed in May, limiting their sales to China, have been lifted. Okay. So this is part of a broader de-escalation between Washington and Beijing under a trade agreement that was officially signed last week. The U.S. had imposed a raft of export restrictions on a range of critical technology to China, not just chip design software, but also jet engine parts, nuclear materials, because they were frustrated that Beijing wasn't allowing rare earth exports. Yeah. And now both sides are trying to improve flows of critical technologies. So it looks like they are kind of delivering when it comes to this trade deal, but why do you think the U.S. is doing this? I mean, I thought months ago this was a red line in some ways, these export curbs. So export controls have historically been used by Washington and justified on the basis of national security. We've had years of escalating restrictions on chips in particular, not just the chips themselves, but also the tools used to make them, that U.S. officials have said are necessary because it is an existential national security threat for Beijing to develop a domestic semiconductor industry that can power advanced AI applications. And when these curbs were initially imposed in May, the industry said, of course, this is just a continued escalation. But it quickly became clear that they were designed, at least in part, to gain leverage in trade negotiations. Now, the Trump administration has said, we're not lifting the earlier curbs. We're not going to allow exports of NVIDIA chips that China has asked for. But there are some China hawks in Washington who are worried about the precedent that it sets to impose curbs on something that's really important to the semiconductor industry, only to lift them less than 2 months later.
Great stuff, Mackenzie. Thank you. Mackenzie Hawkins there, our Bloomberg Tech and Geopolitics reporter, on the latest when it comes to these chip curbs. We're going to talk a little bit more about Alibaba here right now. So now they're offering $7 billion of subsidies for food deliveries and online retail and a boost to instant commerce business in China. Now, in a statement, the firm says the subsidy will benefit both consumers and merchants over the next 12 months. China's e-commerce leader is facing growing challenges from rivals such as Meituan and PDD.
Yeah, and how does this change the profit and the margin outlook for the big companies involved? Now, Bloomberg Intelligence joins us right now. Our senior analyst, Catherine Lim, out of Singapore, to take us through their initial projection and estimate on what this means for the bottom line. Catherine, take us through the thinking.
Right, we're never going to get an end to, this delivery war that's actually going on. And essentially, Alibaba has actually extended the war into 2026 officially. So the $7 billion, it's going to last through the next 12 months. So we're effectively looking at the first half competitive landscape still being very intense. And all that subsidies that's going into for users and merchants. You kind of can imagine, and I wouldn't be surprised if you actually see JD and Meituan retaliating. And that's not going to be good for, the industry profits.
You're saying this price war could go on till next year, possibly, Catherine. I'm wondering, because Goldman came out with a pretty interesting note this morning that they see a potential inflection point in some of these food delivery companies in the second half, because they're thinking that maybe the competition is going to reach a peak in the second half of this year, in the September quarter, and all the risks have been priced in right now. Is that too optimistic, you think?
Well, we'll have to actually see how the consensus numbers comes through. They have been downgraded over the last couple of months itself. The magnitude of which, because we're just done with 618, and we have actually seen all that promotions going on. Now, take a step back. Meituan will be revamping its supply chain. They've talked about it about 10 days ago. JD is actually engaging JD Logistics to actually hire more riders. So, again, I don't see in the near term, we're going to actually see an end, to the profit decline. Of course, if they all decide to actually sink in a lot of these costs into the third quarter itself, into the fourth quarter, you can call it an inflection point.
All right, Catherine, thank you. Catherine Lim, our senior analyst for Bloomberg Intelligence, joining us out of Singapore. Some corporate headlines that we're following for you this morning. Looking at mainland shares in the maker of Apple AirPods, Luxshare. Now, Bloomberg has learned is working with banks on a planned Hong Kong listing to raise over $1 billion. Sources say the company is working with CICC, CITIC Securities, and Goldman Sachs. Luxshare would join another Chinese supplier to Apple, Lens Technology, in looking to trade here in the city. Also looking at shares in Tesla's Chinese suppliers, the EV maker has reported its first increase this year in car shipments from its Shanghai factory. Vehicle deliveries rose 0.8% from a year earlier and jumped 16% from May. Now, that increase, while slight, may signal a turning point for the EV maker in China while it's navigating a relentless price war. And Chinese EV giant BYD, meanwhile, is pausing plans for a major plant in Mexico, citing global trade uncertainty. The company says it still aims to expand its production footprint, but wants to wait for more clarity before making a decision. BYD recently opened its first factory outside Asia in Brazil, which will be capable of producing 150,000 cars annually. Plenty more ahead. This is Bloomberg. All right, it's summer and people are doing their travel plans, and you got to wonder, do I go to Japan this month? That's certainly been a question a lot of people here in Hong Kong have been asking, and it's because of this book right here. This is the manga book called The Future I Saw. The author is Ryo Tatsuki. It was published back in 1999. Why are we talking about it? Well, she's known to be a bit of a prophet because in this graphic novel, she, in some ways, some claim, she accurately predicted what happened back in 2011 with the tsunami and what happened in Fukushima. An updated version came out back in 2011, I want to say, 2021, so excuse me. And it had a little bit of an updated content. And July 5th was the date that was thrown out there of maybe the next impending earthquake. And that certainly has led to a lot of concerns when it comes to people flying there. we actually have seen a bit of a tourism setback there in Japan. You take a look at how flight bookings are concerned. We have seen actually a bit of a drop as early as April. Flight bookings from Hong Kong in particular, which is one of the kind of top markets that do go to Hong Kong. So we've also seen a large search interest from Hong Kong when it comes to this manga book, The Future I Saw, because purportedly this author is able to see the future in her dreams. So there's a lot of rumor, obviously a lot of speculation. Scientists have said, you really can't time the exact timing of these earthquakes. So certainly you got to take it with a bit of, a hint of salt here. But really, it has impacted the likes of airlines, right? So you take a look at how some of these Hong Kong airlines, like Greater Bay Airlines, like Hong Kong Express, for example, they've had to scale back some of their flights to Japan. Cathay Pacific, in particular, is quite exposed to the Japanese tourism market, right? So they're talking about 18% of their seats are devoted to the country over the next few quarters or so. So it could be a hit to the tourism sector in Japan if we start to see Hong Kong travel demand dwindle as well, Dave. But yes, could it be just a short-term thing?
Yeah.
Are things going to bounce back immediately after? That certainly is a lot of questions that we have to ask our next guest.
Yeah, so it's what? It's this weekend, isn't it?
It's the 5th, yes.
It's the 5th. And wasn't there somewhat anecdotal evidence or conversation that bookings picked up after July the 5th? So
yes.
People were going, okay, so it's going to happen, and I might as well be there the day after the tsunami hits.
It's such a conversation starter among families that I talk to here in Hong Kong, whether we should book that travel destination to Japan in July. Maybe I'll wait till later on this month. But if you look at flights and prices there, definitely have dropped quite a bit around this date in particular.
Yeah, and I wonder...
You might be able to take advantage of that.
That's the point, right?
If you don't believe any of this, obviously.
No, and I wonder how the same cohort of people will feel if the yen suddenly weakens to 170. To what extent economics and, economics trumps this. It also brings to mind, and by the way, I'm not trivializing this because, of course, given what happened in March of 2011, but, a year after that, I remember wasn't there, I don't remember the details of this, the call out of the Aztecs for the end of the world, December 12, I think, 2012, and yet here we are. But you could argue things are very different after that.
Y2K, right? We still remember that.
Y2K as well. In fact, this story has caught so much attention that we've dedicated some decent space.
And it's trending on Weibo. It's one of the number one topics today.
Yes, yeah. And some of the commentary there a bit strong. You can check that out in Weibo. More balanced, perhaps, is out of Bloomberg Opinion. Gurod Reedy there, of course, our Bloomberg Opinion columnist, thinks that, and the title of the piece is Disaster Likely Won't Strike Japan This Weekend. He joins us right now to talk about this. Gurod, just making sure that you're there for us. And I'm wondering, well, first, are you scared that something might happen? What are you seeing exactly on the ground there in Japan?
It's a tricky one, and the answer to whether I'm scared or not is that, and the reason that I wrote, likely won't happen this weekend is, of course, earthquakes can't be predicted, and of course, I don't believe in prophecy. At the same time, you were talking there about, the Maya doomsday theories, which, predicted the end of the world. Some people thought, another planet was going to crash into the Earth, one that we can't see, stuff like that. When we're talking about disaster in Japan, however, the possibility of danger is actually always there. The likelihood of the earthquake happening on July 5th isn't particularly high, but a large earthquake happening, in the next decade, in the next 30 years, the chances of that are quite high. So, even though everyone is, maybe you were talking about, tourists staying away and flights being cancelled and that kind of thing, just because it doesn't happen on July 5th doesn't necessarily say that, it's never going to happen. And by the same token, there's no particular reason to be scared on July 5th or not to come, around that date to Japan.
Yeah, how is it being felt in Japan in particular? That's one thing. And is this really going to be a big hit on the tourism sector in Japan?
The hit to the tourism sector isn't particularly huge at the moment. The numbers were down from Hong Kong. My understanding is that it's particularly a topic of conversation in Hong Kong. The most recent data we saw was that the only region that had seen a year-on-year decline in tourists was Hong Kong. That was down about 11% year on year. That's only about 20,000 people, though. One economist estimates that if this continues, however, because there are other rumors going around, my understanding is, that are related to this, talk of, doom striking Japan maybe later in the year. If that continues, one economist says that it might have something like a 560 billion yen impact on the tourist sector, which obviously is not insubstantial. In terms of your first question, how is it being felt in Japan? It's a topic of conversation, I would say. I don't think a lot of people are particularly changing their habits or cancelling trips or, staying at home on July 5th in case something happens. But it certainly is a topic of conversation. I've had people all week asking me about it and asking me if I believe it.
Yeah. Okay. Well, I'm now curious if you do, but let me save that for maybe another time. But so, Gero, I think you hit. That's an important point, because if there is one group of people that are probably the most, I wouldn't say used to, but probably the most, in some ways, agnostic to earthquakes, because it happens so often, and every now and then you get a really bad one. To your point, it's really in Japan, right? And some of the conversations that we have with some of our colleagues in Japan, it's like, oh, there's an earthquake, but yeah, it's like it was only this much on a scale, which would scare most other people except for the Japanese. But yeah, I'm curious. Are there business implications more broadly beyond a specific date? How is the insurance sector geared up and changing its own business practices, given that the risk profile of a place like Japan is elevated compared to most?
Absolutely. To live in Japan is to live with the risk of an earthquake happening at any time. This is one of the things about, these predictions. The government puts out these predictions of, such and such an earthquake has a 70% chance of happening in the next, X many years. There's not really a lot that you can divine from that. I think, the one thing that the authorities particularly say is that, anywhere in Japan, you should be prepared for a large earthquake to happen at any time that might, severely disrupt life, because that's just a matter of life here. There hasn't actually been a strong earthquake in Tokyo for quite some time, which is kind of, people are getting a little bit complacent, I think, or maybe they can't remember the last time a large one struck. In terms of how industry copes with this, it's really hard to say. In many ways, Japan is the most prepared country in the world, I would say, for a large earthquake to happen. Having said that, if an earthquake such as, the Nankai Trough megaquake that is predicted to happen over the next, it regularly happens on a cycle, and the government estimates put it at about 70 to 80% in the next 30 years that it would occur. The level of damage that is being talked about, if that earthquake did happen to that scale, is really hard to comprehend. You're talking 300,000 people dead, economic damage in the quadrillions of yen. So that is something that's very tough to prepare for. I think an event like that is it's something that you can't really prepare for if you are,
right.
If you are a business or an insurer.
Yeah, it's just like the biggest topic, I feel like, among a lot of people that we talk about. Gero, thank you so much for, being our prophet, I guess, and what this all means. We're already Bloomberg opinion columnist there joining us out of Tokyo. Yeah, hopefully not. We will talk to you after this weekend. Okay, if you want to know more about all things earthquakes, there's a way to do it on the terminal, right? Track earthquake news with just one function, NI Quake. And you also got the maps, too, that Ring of Fire. That captures all the earthquakes around that area.
Yeah, we do have data on this, in fact, and I believe this is actually quite up-to-date data. In fact, if I could tell our producers, this is live TV, to just collapse the rightmost panel just to get that even further. Thank you so much for that. So what you have on your screens is in red. The size of the circle indicates the strength of the earthquake. And what you're seeing is the earthquakes that have taken place in that part of the world, particularly in northern Japan, as you can see, right to the eastern part of Hokkaido, over the last 24 hours or so. So I guess to the point we were just making, this happens quite frequently.
There's been tremors.
There's been tremors recently, which I guess depends on how susceptible you are, I guess, to theory.
We'll leave it at that. Plenty more ahead. This is Bloomberg.
Okay, we're looking at the state of play in some of the pound and the key crosses. They're following quite a dramatic move in the currency yesterday. It was done against every single one of its peers, and certainly the melt-up in gilt is a reminder that, you know, this specific bond market is a bad headline away or bad development away from acting up.
Yeah, and it's because of what you saw in that video, right? A very emotional Reeves as she was really pondering what the future of her career is going to be as she sat next to the Prime Minister Starmer there in the chamber on Wednesday as the Premier, sort of in a last-minute effort, batted away opposition questions about this sort of quite humiliating, U-turn the government had to make a daily on these planned welfare reforms. So certainly there's a lot of questions about that. In terms of the gilt traders, they all thought, is this another Liz Truss moment that we're seeing in the market? But at least you're saying now things have stabilized just a bit, thanks to what the Prime Minister did in the last minute. A little bit of support there.
Yeah, and let's see if he further confirms that that job security, because it almost brings to mind the, when the equity market acts up, it doesn't so much threaten political stances. When the bond market acts up, we saw it in the U.S., for example, that's when you did see, of course, a turnaround. And this is almost the same exact analogy, but in the UK context, but same in fiscal conversations.
You saw that spill over into treasuries a little bit, and we'll see if it spills over to the JGB market ahead of that 30-year bond auction. But it's interesting, though, when we saw the pound plunge, usually the safe haven is the dollar.
Yeah.
We didn't see that.
No.
It was really what we've been seeing recently is a flight to the euro that actually saw a benefit. So certainly that's one thing to watch here. And in some ways, this dollar doldrum story continues, even in the face of what we're seeing in the UK.
Yeah, I have, we've been going through a lot of the second half outlooks from analysts and sell side and some of the buy side. And I can't remember one just yet, and maybe we haven't gone through the entire list, that has called for us, a meaningful reversal higher. It still is a key assumption asset allocators are making for a weak dollar going into the second half of this year. Right. Lots of other things. This is just in terms of technicals, right? We showed you the board earlier on some of the pound crosses, and the biggest move we're seeing so far is in the pound against the Aussie. And perhaps it's because of one key technical level that it's hitting, as you can see on your screens. The other thing we want to point out, as Yvonne was mentioning too, is this 30-year bond auction in Japan. And the last time was on, I'm racking my brain now, I'm looking at July 3rd. So it's about a month back. I think June the 5th was the last auction. But that was before, of course, the reforms, which came through out of the Ministry of Finance.
So the Ministry of Finance tweaking how much they issue on the long end of the curve. You also have the Bank of Japan talking about slowing down QT, right?
Yeah.
So certainly, does that change and maybe make things a little bit better for this bond auction leading up today? How much demand you're going to see? Just keep in mind, the last June auction, 2.92 was the bid to cover. So that was quite tepid.
That's low already, yeah.
So it might be difficult, though. We'll see if we get that, right? You take a look at how the 30-year yield is right now. We're still sub 3%.
Yeah.
So we might not see that much of an engagement, though. But it's not just the bid to cover. The tail, very much, we're watching very closely here.
Yeah, the difference between that. That's interesting. Okay, and, I think we will... So we will find out the results of that in about, I would say, 42 minutes, about 40 minutes from now. So what I'm saying is our colleagues, of course, at Insight will be taking care, of course, of that breaking news for you when that drops. There, of course. In the meantime, before we wrap up the China show, a quick glance at some of the movers we're tracking here. So some of the e-commerce plays, Meituan, Alibaba, JD.com. Interesting, of course, the subsidies and what that means for the profit outlook. Goldman seems convinced that we're at an inflection point. They have a buy recommendation on JD, Meituan, and Alibaba.
Yes.
Macquarie, though, interesting. Ellie Jiang, who we've had on the show, is the only one with the latest rating of a neutral on JD.com. The only one on the street that has a non-buy recommendation on JD.com. I wonder what the thesis is there. And I wonder if Ellie could join us, in fact, at some point here.
Yeah, I think that's a call for you, Ellie, to come on the show.
Yep.
But Catherine Lim kind of mentioned it, right? The hit to profit, the hit to margins on the likes of some of these food delivery companies is going to be showing. And basically, Alibaba, the fact that they're giving out subsidies again, just pushed this price war into next year.
Okay, and that means we're almost done on this. And on food delivery, it's almost time for lunch. Yvonne and I are going to hit our phones to figure out what we're going to eat. We'll see you all tomorrow. This is Bloomberg.